If we take the U.S. political economy, the U.S. society, and so forth, for a simple model, I break it down into four parts: the government, business, media, and the public. Okay, now, and there are interrelations with each one. Each group influences the other in various degrees, but for simplicity, I'm going to focus on four of these, 12 possibilities, okay? And that is, I'm going to focus on the control that the government exercises over business through creating the legal environment where corporations can even exist. All right, corporations are a creature of federal law, and corporations could not exist and function without the law being there to help enforce contracts. All right, and without the limited liability structure and so forth. Economists say that our economy is built in part on the limited liability principle embedded in corporations, and all of that is a good thing, provided it's not taken to an extreme. All right. The problem is that in this country, the businesses control the media, especially any media outlet that takes advertising is substantially controlled by the advertisers. Why? Because there are lots of people in the public, and there are very few people in business, and it's very easy for a business to take his advertising elsewhere. All right. How many people are gonna feed the hand that bites them? Feed the mouth that bites them.
Bite the hand that feeds them.
That's right. The media are not going to bite the hand that feeds them.
Yeah.
And the businesses are not going to feed the mouth that bites them.
Oh,
Yeah.
Okay? That's the critical issue. The media will not, the businesses will rarely feed the mouth that bites them. All right? The media control the public through their selection of editorial policy, of what they call news, and for that matter, for what they call entertainment. The public, in theory, controls the government through the electoral process. Okay? Now the problem is that this system is dysfunctional, it is broken, and everybody knows it. All right? Legislators in Washington spend, according to various sources I've heard, spend half their time out raising funds for the next political campaign, and they spend most of the remaining half trying to enact legislation that includes verbiage written by the lobbyists for their primary campaign contributors.
Yeah.
Okay? The result is massive welfare for the wealthy, and over the last 30 years, increasing tax cuts for the wealthy. All right? The 1% who control the advertising budgets and the primary political campaign budgets, they don't like the system. They know it's dysfunctional. They don't like being done all the time. All right? The media can't fix it. Okay? Because the media cannot afford to expose the political corruption. They cannot afford to expose everything that any of the serious stuff that Congress does that gives away billions and so forth to a big business. All right, but there's no consensus on how to fix it. All right, to fix it, we first need to understand it, and that's why I'm putting this thing here. Now, when we talk about all kinds of stuff, like for example public schools or just about anything else, okay, we commonly hear that, oh, we can't afford it, right? Well, the United States today produces double the goods and services per person as 40 years ago. Okay, that means we ought to be able to afford double if we distributed the wealth the way we did 40 years ago, we could all afford to double what we had 40 years ago. All right. Now, the reality is, most of the benefits of the productivity growth have gone to the ultra wealthy. In fact, they've gone to manufacturing a wealthy class that we didn't have before. So, so the next slide talks about growth and income inequality. All right, and this the plot here, all right, shows the bottom 20th percentile, below which 20% of the population is, and the top 5%. The top line is the top 5%, above which 5% of the population is. I don't have the 1% on here. That's even further up. All right, and the line for the 1% I think is even more extreme. All right, than what we see here. Okay, but the point of this is that from 1947, when this data series started, all right, to about 1970, we had equitably shared economic growth. Okay, and we know that because this is called a logarithmic scale, so that 50 is, well, from 25 to 50 is double, and from 50 to 100 is double, and from 100 to 200 is double, so that the distance between 100 to 200 is the same as the distance between 50 and 100. Okay, and that's important because a constant percentage growth each year appears as a straight line. Okay, so it helps understand growth and distribution of income like this. Okay, and so these lines are all parallel from 1947 to 1970, which basically says we had equitably shared economic growth through that period. Paul Krugman, a Nobel Prize winning economist, called that middle class America. All right, since 1970, and especially increasingly since 1980, these lines have been diverging. All right, the bottom 20% stayed basically flat. All right, and most of the gains have been in productivity growth. Well, all of these have been spread out. Okay, but a big portion of the gains in productivity growth have been captured by the top 1% that is not on this plot. All right, this is annual average family income in the U.S. and the data that shows the top 1% is not expressed in the same terms, so I can't really put it on the same plot. It comes from a different source. Okay? So in 1980, Ronald Reagan was elected on a platform of Reaganomics, if you will, of so-called supply-side economics. And he said if we cut the tax rates for the ultra-wealthy, they're gonna invest more and they're gonna create more jobs and everyone will benefit.
Trickle down.
What? Trickle down economics. And someone said, I'm tired of being trickled on.
Yeah.
So, in any case, it's clear from this plot that hasn't happened, right? Yet that mentality still drives what's happening in Washington and what's happening in Sacramento. Okay? Let's go to the next slide here. Finance is a percent of U.S. domestic corporate profits. The finance industry being banks and the insurance companies and your stockbrokers and so forth and so on. All right. From 1934 to 1989, they averaged 14% of the U.S. corporate domestic profits. Okay, that industry took home 14%. In the 1990s, it were 25% of U.S. corporate domestic profits. Since 2000, it's averaged 32%. Okay, those changes are a result not of changes in tax law, but in changes of banking regulations and finance regulations, and they're a result of one other important thing. All right? No, well, there are actually two other things.
Sorry.
In the 1990s, the increase was due to bank consolidation and computerization and the fact that consumers do not shop intelligently for finance, okay, for banking services, okay, for loans, etc. All right, and people use the credit cards, and the credit card debt is one of the worst kinds of debts you can possibly have. There are other cases like student loans. Now I understand that the law for student loans, students, they're also exorbitant. Apparently, I don't know what the interest rates are, but I know that people come out of college now with enormous debt, often that they can't pay, and they don't have the same recourse to bankruptcy law that the big money does. Okay, the major corporations and the individuals who manage those major corporations and who control the campaign budgets. All right, the campaign budgets and especially the advertising budgets. Those guys have an easier time with the bankruptcy law. Okay. Since 2000, we had the repeal of the 1932 1933 Glass-Steagall Act that kept commercial versus retail banking separate. Okay, so now I put the two kinds of banking together, and basically what that does is it allows the major bankers to gamble on the international currency markets with your money.
Yep.
All right, and you get hot money now with the free trade, okay, and unlimited transfer of currency, bringing down the entire economy of Greece, threatening the economy, pushing the Irish to extremes, and now Italy and Spain, and creating the massive unemployment that we have today in the United States. So let me talk about bias in the media. All right, for 30 years I've heard a steady drumbeat, less maybe in the last year or so than before, that the media has a liberal bias. All right, if you Google for bias in the media, 90% of the hits you'll get will be people ranting about liberal bias in the media. Very few of them have any data. Okay, very few of them cite any real serious things. A few of them will give some anecdotes. All right, the other 10% will nominally say basically the opposite, that the media have a conservative bias. All right, but again, very few of those give it and cite any real data. And the ones that have the more systematic compilations of events don't cite the other ones. Okay, the only sources I know that cite both sides, the primary sources on the web, are Wikipedia articles on media bias and media bias in the United States. All right. There's a book by Herman and Chomsky entitled Manufacturing Consent. Does anyone know this book? Does anyone know the name Chomsky? Noam Chomsky.
Yeah.
Chomsky is as the people who know, he's the most frequently cited living author. He revolutionized, he's sort of like the Albert Einstein, I think, or maybe the Isaac Newton of linguistics, with his PhD dissertation and books he published right after he got his PhD in the 1950s. All right, but he's been a vociferous critic of especially U.S. foreign policy, in carefully researched articles and books where he carefully cites his sources. Yes?
Can you spell that for me? Chomsky?
Chomsky, it's right here on the bottom line on this page. Okay?
Oh, yes.
Yep, right down there.
Thank you.
Great, thank you. Thank you. Okay? Number two, they want the media to look elsewhere while they're bribing government officials and getting special tax breaks and other special breaks, non-tax things where the U.S., for example, for the military industry, the U.S. State Department basically acts as a clandestine sales arm for Lockheed Martin and Boeing and the other military contractors in the United States. All right? So, if a media organization is honestly more liberal than their audience, what happens? They lose audience share. All right, and if they lose audience share, they lose advertising because their advertising rates are set based on their audience. If you upset an advertiser, that's a quicker way to lose money usually than upset your audience. Yes. What Harman and Chomsky found basically is the ratio of coverage between worthy and unworthy subjects was 100 to 1. Okay. So you'll still see occasionally in the media stories about the political corruption in the United States government and so forth and so on, but it gets, probably 1% the coverage of let's say, stories about, well, Ronald Reagan used to talk about the welfare queens, all right, who allegedly made huge amounts of money filing for welfare under a bunch of assumed names. From what I heard, people journalists who look for the evidence, the real cases behind what he said, didn't find them. Okay? Yeah. The story may have been true occasionally, whatever, but the biggest welfare cheats are the corporate executives who get welfare who get all kinds of tax breaks and who get all kinds of support from the United States government to support the death squads in Latin America and around the world to prevent people in those countries from peaceably assembling and petitioning for their government for a redress of grievances. I wish it were not the case, but there's ample evidence of that. Testimony before U.S. congressional committees of the House and Senate of various, and testimony of people who used to work. Memoirs of people who used to work in the Central Intelligence Agency and so forth. Comments?
Does that school still exist?
The U.S. School of the Americas still exists. Yes, it still exists. And schooloftheamericaswatch.org, if you Google for School of the Americas Watch, it will take you to their website. What do we do about this? Okay? Frankly, as I said in my opening comments, all right, there are four basic actors. Each of these four groups, everybody agrees that the system is broken, it's dysfunctional. They don't know what to do about it. They don't know how to fix it. All right, there are currently basically no adults here. All right, and the only potential that I see for serious action to fix this is right here, by the action of the public. Okay. First and foremost, you need to cut the reliance on the mainstream commercial media, the people who are paid to lie to us. All right, and now we get at least some chance of that with the web. That gives us all kinds of access to a lot of stuff that we wouldn't get in the mainstream commercial U.S. media. Okay. And I think the critical lacking, over the past 30 years, there's been a substantial consolidation of the media. Okay, there are many fewer media companies today than there were 30 years ago. And one of the things that they have done is slashed funding for investigative journalism. Okay? Why? Because it's a huge loss, basically. Often, you know, if you want to say something, if you want to criticize the poor, you can say all you want. Nobody's going to sue you for libel. If you criticize the wealthy, you can lose advertising and you can get sued for libel. So that means you have to work very hard. There's a double standard of necessity built into the system, and you have to work very hard to make sure you got your facts straight. All right, and that's expensive. Okay, and the advertisers don't want it. Okay, because in most cases it's going to expose stuff that they'd rather not have exposed. So you wind up, it's expensive. If you get a story, it generally doesn't run for very long, and it offends advertisers. Okay? Now it turns out that, somewhat amazingly, at the end of World War II, Eisenhower in Europe and MacArthur in Japan imposed serious public funding of investigative journalism and vigorous, independent, publicly funded media. And my understanding is that, according to Robert McChesney and some of his works, they have a better, more vigorous, and better informed public than here. All right, and some of them don't have the same problem with growth in income inequality, especially Norway and so forth, that has quite a vigorous independent press, apparently. My number two thing is move your money, and so we've had some movement on that, and we've had various campaigns and groups out talking to people, trying to suggest that they take their money out of the international financial institutions and put it into local-only banks or credit unions. Turns out the city of San Jose banks with Wells Fargo. Okay? Their contract with Wells Fargo expires next June. So there's a potential there for people, if we can get people interested in it, to contact their city council representatives and ask them to not renew that contract, because otherwise it will be automatically renewed, most likely. Okay, and to transfer their financial dealings to a local-only bank, a California-only bank, or to a credit union. All right, and that's important because as I said, that part of the problem with the U.S. economy, the international economy today, and the high unemployment rate internationally, and so forth and so on, is the ease with which the major banks and other people with lots of money move their money from one country to another. Somebody said about the financial meltdown of a couple of years ago and the bailout in 2008, said, gee, I'd like to have that deal. All right, profits are privatized, losses are socialized. Okay, that's it. Profits are privatized, losses are socialized. When the banks, we gamble with our money and they lose big time, we bail them out. Why? Because we need banking services. We need a stable, sensible, functional banking system and finance system. I'm the president of a small company. Okay, I need finance to make my company go and grow. All right. Where am I going to get that? We need liquidity in the market. All right, as they say, as the financial wizards say, we don't need hyper liquidity. All right. During the late 19th and early 20th century, during the period of rapid industrial growth of Japan and Germany were net capital exporters. Okay, they were growing very fast, and all the growth was basically self-financed. they didn't need external finance. Okay? So, comparison shop for finance. Okay? That's on the other comment I had here. The primary things, one of the primary reasons that the banks and the financial companies get away with make such a high percentage of the U.S. corporate domestic profits is because they've successfully made their services so complicated that nobody can understand them sensibly. Okay, I'm an engineer with a PhD in statistics. All right, you know, in the 90s, my wife was talking to me in the late 80s and the 90s about refinancing our home. Okay, twice we went and listened to bankers about that. Okay, and we walked out of there, and my wife was thinking, we just talked to a con artist. And I was thinking, it'll take me several days to figure out if this is a good deal or not. Yeah. And I didn't have several days of time, and we didn't need the financing, so we didn't do it, fortunately. Yeah. All right? But there are all kinds of things that people can do to protect themselves. You need to shop intelligently for banking services, for finance. Anytime you need a loan, don't accept, if you're going to buy a house, for example, okay, or you're going to buy a car or whatever, don't accept the first loan instrument they give you, financing that they propose for you. Shop around, okay? That's really important. If you got credit card debt, find a way to liquidate it somehow. In the bookmark here, the bottom line right before the plot says, one way out is for the bottom 99% to cultivate an appetite for investigative journalism and vigorous but amiable political discourse.